Pay attention to the market this week. It is very important this week. Why? You have the Fed rate rise this week. You have Jerome Powell's news conference this week. You have the November CPI inflation figure that will be released this week. Early on Wednesday, Dow Jones futures, S&P 500 futures, and Nasdaq futures all fell, as the electronic vehicle behemoth provided another price incentive in China. Tesla stocks fell. Apple and Exxon Mobil broke below crucial levels on Tuesday, while Amazon and Tesla are starting to move near bear market lows, giving the stock market rally another difficult session. The S&P 500 and other important indices were rounding major gains made last Wednesday after Fed Chairman Jerome Powell's speech by testing or undercutting key levels. Several significant one-day gains during this stock market rise have been followed by pullbacks. This has made it challenging for stocks flashing buy signals to advance. Investors should keep an eye out for equities that are poised to rise, but now is not the time to increase exposure. Ready to hear more? Stay tuned for this week's Money Talk Sundays Market Recap. Thanks for tuning in to Money Talk Sundays Market Recap. I'm your host, Stevie B. Make sure you like, share, and subscribe. Again, like, share, and subscribe. Like, share, and subscribe. Hit that subscribe button if you're watching on YouTube. Hit that subscribe button. I like to see those numbers going up while we build this channel and we continue to evolve. Like, share, subscribe. Also hit that notification bell so you get notifications when we drop our videos. Moving on to our market recap for the week. Don't confuse it with the top 5 winners and losers. I may still do that, but I'm looking to evolve, broaden this channel's horizons as we start taking on more stories and more various opinions as far as how the market is rolling. Anyway, besides all that, doing too much, let's keep it moving. The stock market recap for last week. Now, UnitedHealth Group, United Rentals, and United Airlines are all trading in close proximity to buy points. IBD Leaderboard lists the stock of United Airlines, whereas Leaderboard Watch lists the stock of URI. The IBD 50 list includes United Airlines, Charles Schwab, and UNH stock. The IBD stock of the day on Tuesday was United Rentals. MongoDB, or MDB, a provider of database software, rose early on Wednesday on a surprising profit. Over the past year, MDB stock has fallen quite a lot. Now, Mobileye, ticker symbol MBLY, a manufacturer of driver assistance systems, outperformed expectations in its maiden report following its IPO in late October. The MBLY stock fluctuated, however. Now, when the closeout company Ollie's Bargain Outlet, or OLLI, underperformed on earnings and sales, its stock fell. In comparison to fair value, Dow Jones futures declined by 0.3%. Nasdaq 100 futures dropped 1%, while S&P 500 futures dropped 0.6%. Now, the yield on the 10-year Treasury increased by 4 basis points to 3.55%. Futures for crude oil tacked upward. Cost of natural gas increased by 3%. The U.S. consented to ship the U.K. additional LNG. Now, as anticipated, China revoked additional COVID regulations. Remember, China backtracked on their zero COVID policy after recent protests. Nonetheless, trade data was weaker than anticipated. The previously rising Hang Seng in Hong Kong dropped 3.2%. Keep in mind that overnight trade in Dow futures and other markets may not necessarily reflect real trading during the following normal stock market session. But after Tuesday's opening, the stock market rally quickly declined. It continued to move lower throughout the day before marginally reversing course around the close of business. Now, Tuesday's stock market activity saw a 1% decline in the Dow Jones Industrial Average. S&P 500 index losses were at 1.4%. The Nasdaq composite fell 2% in value. The Russell 2000 small cap index fell 1.5%. Prices for U.S. crude oil also fell 3.5% to $74.25 a barrel. Now, the 10-year Treasury yield decreased 9 basis points to 3.51%, returning to levels not far from those seen back in September of this year. There may be a breakdown in the inverse link between Treasury yields and the stock market. In contrast to lowering inflation pressures, a lower 10-year Treasury yield may increasingly represent greater recession risks. Concerns about a recession are also indicated by the yield curve, which keeps inverting further and further. Now, a component of the Dow Jones, S&P 500, and Nasdaq composite, Apple stock fell 2.5% to $142.91, returning it to below its 50-day line. The price of Exxon shares dropped 2.8%, falling below both a buy target and its 50-day line. The price of oil, gasoline, and natural gas are all falling, which is hurting Exxon stock. Now, Amazon stock fell 3% to $88.25, moving in on its bear bottom of $85.87 set back on November 9th. Despite being off intraday lows, Tesla shares lost 1.4% to $179.82 on Tuesday. After falling 6.4% on Monday, Tesla is now approaching 52-week lows, but it still has a way to go before it reaches the 166.19 level. Now, in addition to the existing 4,000 won insurance subsidy, Tesla is also providing a discount of 6,000 won or $860 on existing vehicles in China. Tesla China is providing nearly 20,000 won in incentives in addition to other incentives, and that's before government subsidies of 11,088 won. Now, more evidence is emerging that Tesla will bring radar back into its vehicles. Back in 2021, during the chip shortage issue, Elon Musk removed radar from future Tesla electronic vehicles, claiming that vision-only systems would be preferable for automated driving. Now, almost every other player in the autonomous driving makes use of various sensors. Early on Wednesday, Tesla stock decreased by 3%. Good job, Elon. Now, the iShares Expanded Tech Software Sector ETF, IGV, one of the top tech ETFs, lost 1.7%. Van Eck Vector Semiconductor ETF, SMH, lost 2.2% of its value. While the Global X US Infrastructure Development ETF slipped down 0.3%, SPDR S&P Metals and Mining ETF, XME, crept up 0.25%. U.S. Global Jets ETF, JETS, maintained height. S&P Home Builders SPDR ETF, XHB, decreased by 1.4%. Both the Financial Select SPDR ETF, XLF, and the Energy Select SPDR ETF, XLE, experienced declines. A 0.8 loss was seen in the Healthcare Select Sector SPDR Fund, XLV. Now, both the ARK Innovation ETF, ARKK, one I personally am invested in, and the ARK Genomics ETF, ARKG, experienced declines due to more speculative tail equities. All of ARK Invest ETF hold a significant amount of Tesla stock. Now, the share price of United Rentals increased 0.5% to $347.29, slightly above the 21-day line. The buy point from a consolidation that dates back to November 2021 for URI stock is $368.04. Now, an early entry can be available if the handle breaks its downward trend. Deere, or DE, Caterpillar, CAT, and Titan Machinery, TITN, are just a few of the heavy machinery investments that appear to be doing well at the moment. Stock in UNH increased 0.8% to $539.32. The Dow Jones juggernaut has a buy point of 558.20 from a flat base near a cup and handle consolidation. Now, according to MarketSmith Research, United Airlines stock increased 2% to $45.92, slightly above the $45.67 cup with handle purchase point. Other airline and travel-related stocks appear to be in good shape. They're hovering up about the same. Now, the stock market surge carries on a maddening pattern of making 4 strides forward and then reversing course over the following few days. So it's continued to bounce up, pull back, bounce up, pull back. But that's the market. That's the nature of the market. The major indices have experienced 2 straight days of significant declines, wiping out completely or reducing the significant gains made following last Wednesday's speech by Fed Chairman Jerome Powell. The S&P 500 index extended losses Tuesday to breach the 21-day line after dropping back below the 200-day line on Monday. The Russell 2000 fell below the 200-day and 21-day lines, reaching its lowest closing since November 9th as the 50-day line once again entered the picture. Now, the S&P Mid-Cap 400 descended to test its 200-day line after closing below its 21-day line for the first time since October 20th. The Dow Jones, which has been at the forefront of the market recovery, dropped below its 21-day line for the first time since October 14th, but is still significantly above its 200-day. The sluggish Nasdaq broke below its 21-day line and is now once more getting close to its 50-day line, which is barely above the 11,000 mark. Before the October 10 gap up on the October CPI inflation report, all of these indices finished at their lowest levels since October 9th. Now, because Fed Chairman Powell didn't say anything particularly novel or dovish, last Wednesday's significant market gains were initially confusing. They were perplexing. It was like, why did it jump up that much? Even more confusing was the fact that the major indexes held steady on Friday, despite the strong jobs news, with Treasury yields ultimately ending lower. However, the technical picture is still well known. The major indexes have had significant one-day creases since the stock market surge started on October 13th. Example includes October 28th and November 30th. However, they quickly turned around and lost the majority, if not all or more, of that significant gain. Thus, this market boom that we see begins to wane once more as the major indices reach new heights and leading stocks flash buy signals. The market surge has thus far recovered ultimately from each setback. So yes, it bounced back, it pulled back, then it shoots higher, but it pulls back, shoots down, and then shoots higher, creating greater highs in the process. However, it doesn't follow that it will occur this time. What's more, it doesn't necessarily imply that your particular stocks will rise again. Investors should be cautious about increasing exposure until the S&P 500 rises completely and definitely above the 200-day line. Indicators to further cut exposure include the Nasdaq and Russell 2000 breaking below their 50-day lines and the S&P 500 testing its October highs. Also keep in mind that the November CPI inflation figure will be released on December 13th. So in 2 days, we will have the November CPI inflation figure, the day after the Powell news conference and the year-end Fed rate rise. These significant occurrences could act as the impetus for a market rally to go higher or to break lower. Investors ought to be prepared to take action. This calls for a prepared watch list as well as continued engagement and adaptability. Pay attention to the market this week. It is very important this week. Why? You have the Fed rate rise this week. You have Jerome Powell's news conference this week. You have the November CPI inflation figure that will be released this week. We have the perfect storm set up for the market this week. Ladies and gentlemen, this week, you definitely need to pay attention. Pay attention, pay attention, pay attention. Thank you for tuning in to Money Talk Sundays. I'm your host, Stevie B. I'm out.